Morning, guys. We're gonna do a quick Q&A
Morning.
today, and go over
Hi.
the option chain and more or less of how I pick my strike prices. I'm hoping everyone had a good weekend. Today's MLK, so the market is closed today. So our team took the time to take this chance to review and go over a couple things. Like I said, I'll be going over the options and how I pick the strike prices from opening bell to as the time goes on all the way to EOD lotto. There's a different technique for it all, and hopefully I can break it down for you. It might be a little bit hard because of the option prices, and we're a day behind, but I'll try my best. Before I start getting into it, is there anything that anybody wants me to touch on while I'm going through how I do this?
No, I think the concepts will get clear. The numbers are a little off.
Okay. And anybody, is there anything that anybody wants me to touch on, like, or maybe as we go, then we'll get more questions. But if there's nothing that you guys have from the top of your head for me to touch on, I'll go ahead and just start here. Okay, so let's go. Let's start with spine. So before I go on, you guys are familiar with what screen I'm looking at here, right? You guys understand what this is, right?
Yeah. Yep.
Yep.
This should be like, if you don't understand what this is, then you shouldn't be trading options. In my personally, right? This is how you pick your options, and this is what's gonna make or break your profits, right? If you pick the wrong strike price, your profits can change anywhere between 10 to 100%. So strike price is very vital, very vital, and also depends on what ticker you're trading and at what time. We're gonna go ahead and do something I do every day. I start off with SPY. You guys all know that. I like to start off the first trade with SPY, and kind of the way I would pick it. I pick my strike prices before the open. I pick my strike prices when right after I do my pre-market prep and I know my levels, then I would pick my strike prices. So let's go ahead and do that. So we're gonna go over here to the chart, right? This is all options, right? This is option price. This is also option price. This is a red. This is a green. This would be for shorts. This would be for longs. I'm not gonna go into detail about the active trader. We'll have a session where we go deep into the active trader, but right now I'm going into how I pick the strike price, right? So just by looking, say for example, we do our pre-market analysis. I'm just gonna do a real quick one: pre-market high, pre-market low. So from that, these are my strike prices, boom and boom, right? So 477 to the long side and 475 to the short side, right? Those are my strike prices that I'm starting with, right? So what I would do is I'd go back to the option block, right? Now we're black at the option block. And you guys remember what I said? I said 477 call and 475 short, right? So we'd go over here 475 for the short side. I inject it to my red, which is for my shorts. And then for the long side, I would go over here to 470. What did I say? For the long side, I'm sorry.
77.
477. Okay. And then I'd go to the long side and I do 477. Bam. Bam. Right. So now I have both my strike prices. By me doing this is very helpful as far as trading psychology, because it gives you no bias. You don't have a position open, but you're ready to take either side, right? So now that I injected my contracts into the active trader, now I have my 475 shorts right here. If you guys can see, I'm gonna have my 477 long right here, right? So we're not here to predict, right? We're here to react, right? So what I do is I wait for levels, I wait for confluencing factors, then I react. And I react by depending of the direction. If I think the price action volume is going to show us to push down and we're going to start breaking levels to the downside, then I'm going to go short. And same thing for the long side. And this is how I would go about picking strike prices in the morning from the opening bell, right? This and you'd anticipate to play these strike prices for the next 2 hours. You know, we'll say on average these strike prices will be good for 2 hours unless they have like some crazy pump or some crazy dump. Then you would have to reevaluate and look at the levels and then pick new strike prices. But from the opening bell, this is how I pick my strike prices. And yes, I trade SPX more heavy than I trade SPY, but it's just been a rule of thumb for me to start the day with SPY. There's a lot of reasons that go behind it. I'm not going to go too much detail, but one, it's super expensive right off the open to trade SPX. And I'm like a bargain guy. I like to get everything cheap. I like to get my money's worth, you know. So that's how I would pick strike prices off the open. Is there any questions of how I pick these strike prices off the open?
No, but just you mentioned before as a comment, it's less risk with a less expensive option.
Yeah. So the thing with SPY, right, is it's already cheap, man. You get what I mean? So it's like with SPY, you're just basically you want to position yourself where you're gonna get the most, right? The reason I'm picking those pre-market highs and those pre-market lows as an example is because once it gets there and it starts breaking that pre-market high or pre-market low, that first candle, you're gonna get a premium explosion, right? I talk about this all the time. You guys always say, "Oh man, the contracts are not moving. The contracts are not moving." It's because of the contract strike price you're in, and because it hasn't broken that level yet. Once it breaks that level, then you'll start seeing the contract start to push up.
Yeah, and the benefit is you can hold it; it won't go down much against you.
Exactly, 100%. Once you break that level, even though it starts going against you, it's not gonna go as hard. But in that small period of time, that's the vital area. That's where it takes a lot of psychology, discipline, risk management, just executing, entering at the good spot, and yeah, it's just vital, very vital. That's how I go about picking strike prices from the AM. This is pretty self-explanatory. There's no like secret to it or anything like that. It's just real basic, real basic. Does that make sense?
Yeah. Yes, sir.
Yeah, it's not gambling. So thanks.
Okay, cool, cool, cool. Okay, so after initial trade, once the day goes on and we start to actually build some levels throughout the intraday, I like to change, right? And I'll go to SPX, right? And let's go over here. All right. So example purposes only, right? So we're already in the day, right? And this is what we have so far, right? On the SPX side, I do about 12 right now, right? For 4755. So I would look at something like that, 4755 on the short side, and then 4810 on the long side, right? Those are the ones I'd be looking for, right? What's that? And that's how I would pick later on in the day, like after initial trade. I go about 12 strike prices. 12 strike prices is what I usually do. That gives with that with that amount of space, it gives me enough room for risk management, and I'm not buying these expensive contracts, right, when the trade goes against me. Yeah, in these trades, you're gonna make a lot of money when it goes for you, but at the same time, you're gonna lose a lot of money when it goes against you. This way, say that we're in a pilot position, you know, the most we let a trade go against is about 30 to 40%, right, until it breaks the level. So if we're in a pilot position, right, and the trade starts going against us, we're only gonna lose about 50 cents of this, right? So you're gonna exit this call with the dollar if the trade goes against us, right? Now, if you're in this position right here, the $10 one, right? 20% of that, you're gonna sell around 780, so you're losing to $2, right? For a potential, $12 for a $2 gain. When here you have more potential to push up, and it's just more safer as far as when it comes to risk management. I would not recommend anybody to play up in this area. The minimum, I'd say two strike prices away. The maximum, the closest that you want to get is that. For me, I like this one, the 12 strike price. For me, that's vital. I like those ones, right? And then those are very, very, very vital. Those are the strike prices that I would concentrate on and look at. So now, when we're going to lotto, right? Man, there's a lot of contracts. Okay, before I go into the lotto strike price, is there uh is there uh is there any questions on how I do the intraday after the initial trade strike price? How do I pick it up? Does that make sense to anybody?
Yeah,
Absolutely.
that makes sense.
Quick question.
Yes.
So you're selecting pilot uh, right now, right?
Yes.
Pilot position,
Yes,
like
sir.
initial. So when do you, what do you see? I know, I mean, we look at the charts and stuff like that, but what makes you go like, okay, now I'm gonna put my whole
Okay, so
position.
there's a multiple things. It's not just one, right? That's what a lot of people get caught up on. They're just waiting for one thing, and sometimes it doesn't happen, right? And then they miss it, and then something else happens, right? So for me, it's multiple things, and I talk about this all the time. And this is all based on off of your trading DNA, experience off the charts, and just being able to read price action, volume, and just being able to navigate through the charts, right? Once for me, the biggest thing is confirmation of a break of structure, you know, confirmation of a close, confirmation of a cross. Those are confirmations for me, right? Once everything is validated and I'm trading with the trend, that's when I would strike when the iron's hot. If that makes sense. Does that make sense?
Yeah, and is volume considered all the time, or
All the time. Volume is mandatory.
no?
Volume,
Like when it's either going to go up or down.
yes.
Uh,
So
Besides change of structure, do we also see volume? Because volume may be, already spiked before that.
okay, let me
So
explain
something
something.
like that.
Yeah, let me explain to you something about volume, right? So volume is gonna be one of the biggest confirmations that you have, right? For me, right? And this develops over time, and you're gonna find your niche and what you're good at, and what's your signal, right? But for me,
And we'll share with each other. It's good.
yeah. For me, my biggest one is volume, brother. My biggest one is volume. So let me explain something to you here, right? let's see. Let's look for a good example. This is a good example here. So when you're looking here, right, you see these large volumes. They're breaking these levels with large volume, right? So when they're breaking a level with large volume, usually it's a legit break. For example, right here, look, they're coming to this level, they're about to break this level, but they don't break it. They get a doji and the volume changes, right? If this would have continued with red volume, it probably would have broken this. Let me find a good example. Those aren't very great examples. Okay, so this one's a good example right here. So you see how we come to approach this level, right? We break the VWAP, right? And then we come to this BJQ level, this 477, very strong area, right? We go and we break it with a nice size of volume. So for me, this is a legit break of this level. This level right here, we broke this legitly because it broke it with volume, right? For example, look, we're coming to test it. We're not gonna break it. Look at the volume. Even though we came and went inside, I could tell you right off the bat that we're not gonna this red candle is not gonna break because the volume is not there. And let me find those are the worst examples, but let me see if I can find you a good example here, just so you can see it. But remember, we're not just waiting for the volume. It's a combination, right? And you're gonna have to find what's your combination, what's your deadly
What are you
combination.
doing, Ray?
You're gonna have to find what's your combination. So here's another one, right? I'll give you an example, right? Red volume, right? Red volume, it broke the level, and this volume over exceeds this volume, right? So for me, that's a legit break of that level. And green, we go to test it, it's not enough volume, so they can't break it, right? Big volume, legit break. Big volume, legit break, right? Let's do green volume, right? So let's look for a nice volume spike. Here, no. Okay, so this is good right here. Here's another example of a volume, right? So this is the 9 and the 50. We have, I mean, the 9 and the VWAP. We have nice volume, right? So I'm probably taking this trade right here. And when we come to break the level, we break the level with nice volume. When I say nice volume, it's not small volume like these small ones, right? It's larger, right? The larger the volume, the more legit the candle and the break is, right? And you see how, okay, this candle is small, right? It's a doji, but the volume's there. And what happens? We just continue to push, right? We continue to push. And I don't know how to explain. Volume is like price action. You have to understand over time and experience. You'll be able to read it. I almost want to say self-explanatory and common sense, because if you look at the size, usually I don't have colors on mine, so I'm not really looking at the color. I'm more looking at the size. But just try not to overcomplicate it, right? So, once we come to a major level, major level, right? Once we come to a major level and the volume's not there to break it, look, we're coming to this major level and the volume is starting to taper down. There's no volume here, right? Probably not gonna break it, right? But that's
So
just one confirmation is the volume.
yeah. So you look for a volume spike
No, I
or
don't look for a volume spike. I look for
volume increase relative to like last 4 or 5
no, I'm just
volume
looking
candles.
for no. You don't look at the, I mean, yeah, you're looking at the previous volumes, but what you're looking at is once you're getting to a level, right? Your level, say what your level is, we'll say your level is 472.50, right? We'll say that's your level, right? Once we get to that level and we break it and the volume's not there, then that wouldn't be a confirmation. Once we get to level and it breaks it and we have a nice amount of volume, then that would be a confirmation. Does that make sense?
Yep, yep. Yeah, so you said you don't look at like green and red volume, right? You
Yeah.
just so wouldn't it be helpful to see for example, for me,
It's
red
not. I'm
is
gonna tell you why, right? Because if it's a green candle, it's gonna be green volume. If it's a red candle, it's gonna be a red volume. So there should be no reason to look at the volume, right?
oh, is that how it
Okay.
works? Okay, I thought okay.
Does that make sense?
Yeah, yeah, yeah.
So
Okay,
it's
that
like it's
wasn't
like
sure.
yeah, yeah. So if it's a if say if it's a positive candle, it's gonna be green volume regardless of the size of the candle. If it's gonna be a negative candle, which is a red candle, it's gonna be red volume. So it's just like kind of like the ticks. I got in a fight with somebody. I don't know if you guys remember, 5 6 months ago, because I do black and white ticks. Because for me, it doesn't matter what color is the tick. It matters to me of the number, right? Kind of the same thing with the volume. It doesn't matter to me if it's a red or a green volume. It just matters the amount of volume, amount of people.
Yeah, I guess it doesn't tell us just by that if it's an aggressive buy or a aggressive sell.
Yes.
So
So for
just color
example,
doesn't matter then.
right here off the open, right? You see this green, this nice large volume that we're getting, right? If we would have broke up here and had another volume like that and a clean break above this pre-market high, I would have taken a long position. Right? I would have taken a long position because we're breaking that pre-market high with nice volume. But the exact opposite happened, right? We came to the pre-market high and volume started building up, rejecting. You understand? So for me, this is a legit reject off the pre-market high. This is legit, right? This is not a retest and push up, right? If this was a retest and push up, we'd see more volume, more green volumes start to come in. I don't know if that makes sense.
That's good. Kind of quick
Yep,
question
yep,
on
it
the
makes
volume.
sense because
Mhm.
the spike, the green spike volume that you showed, it's hard to maintain, and obviously that's like something you need to something goes in our head that oh wait a minute, it could go either way. Yeah, I've seen that before, so
Yeah,
that's like out of the ordinary kind of thing, it's
exactly. Use the
way
volume. Use the volume as a gauge with the price action as a confirmation. After we finish the option block, I'll go. I'm sure there's going to be people that have questions about confirmation, and we'll go over multiple confirmations too. But yeah, that's more or less on the intraday on the option block. Let me break down the lotto now. Unless somebody has more questions on the intraday,
Just a
how
quick
we?
number. The volume, can you hear me?
Yes.
Oh, yeah. If you get like a 4 or 5 of one color, would you expect that you're probably gonna change, like if you get 4 or 5 of the green,
I
green,
wouldn't do
green, and
that.
then
I
the
would not do
volume,
that.
you
I
don't
would
want
not
to?
do
Okay.
that. I would not try to
No,
count it. I would just
thanks.
wait. I would wait for it and react. Try not to predict anything. It's very, very vital that you do not try to predict anything. You get what I mean? I mean,
Got,
of course
yeah.
we take chances and sometimes we'll go first or a little early, but we never want to get into the habit of trying to predict, right? We don't want to say, oh, since it's been red, 7 red, there's gonna be a green one. That's no. We're not gonna do that. We're gonna use basic fundamentals. We're gonna use price action, and we're gonna react. That's it. There's no going first. There's no being Superman. We're gonna wait. We're gonna wait. Intraday strike price? No. Okay. Going once, going twice. Moving on to the lotto. Okay, so what we got here. So lotto. I told you guys all the time, you do not want to get anything under 50 cents on the lotto. Okay, quick breakdown for the lotto criteria. Anywhere between 1 hour to 45 minutes until close, right? A lot of people like to call that the power hour. That's the lotto, right? and 9 out of 10 times you will be able to catch the lotto if you're patient, if you're able to execute, and you just have a plan, right? That's the most important, executing the plan. But criteria is 45 minutes to 1 hour to close, SPX, zero DTE, anything under 50 cents, 90% of the time is going to go to zero, right? I talk about this all the time. My sweet spot's between 90 cents, right? Somewhere between 90 cents. I recommend getting strike prices between 70 to about 150, right? That's around the sweet spot right there. And that's the best. For me, the risk management and just the way the setup is there, you can't go wrong. It's an easy 100 to 600%, even 1,000% on some of those days. But yeah, anywhere, we'll go with the 70 cents, right? We'll say 70 cents would be my area to go, right? So let's go ahead and look at the SPX price. So looks like on the short side there's nothing. So I'm gonna go with the 80 cents, $80 short, which is a 4730. I'm gonna go ahead and inject that to the short side, and then for the long side I'm gonna take this 4820, right? So I like to get it, like I said, right under $1. Very vital of these strike prices, right? Right under $1, right? And please above 50 cents, right? Above 50 cents. At least, if you can, if possible, 2 strikes above the 50 cents. Right here we couldn't do it. We'd only do one. Well, let's do this one. This one. Oh shoot. I don't want to do that. Let's do this one. Let's do 4815. 4815. So when the lotto comes and I'm telling you guys, hey guys, so these are the strike prices I'm looking at. I'm looking at 4815 call and 473 short. And this is what I'm doing when I'm calling out the lotto. So these are strike prices, guys. These are what I'm looking at. Boom. And then we go back to the chart. And I use this guy right here. This is vital right here. It's not showing us the prices, but let's see. This is vital right here. So this is how and what I use the most to play the lotto. So we'll say we're playing the short lotto, right? And this is all example purposes. Times are going to be different. We're just looking mainly at the option price and how we would gauge this, right? So as we can see based off the option price, right? We can see we have a plateau in this area, right? Which is around the price that I said, around $1, right? So ideally, we want to find a trade, right, that sets up for a small, what is this? Since it's a short, some sort of rejection, some sort of pullback, some sort of continuance, right? Because as we see, this thing was at $4 and it just continues to push down, right? And I've told you guys a lot of times, anytime that the contract is going in a certain direction and it changes direction, we get spikes, right? And that's what we want. That's what we're looking for in the lotto. And another thing I'm going to explain about the lotto is it's a zero DTE and it's an end of day. So this is another reason we have spikes. There's people like us trying to get in and get out quick, and there's people getting out, right? And sometimes that gives off a squeeze or a short squeeze or imbalance in options, and they're just trying to fix it, right? So ideally we want to get these around $1, right? $1.10 or whatever, right? And see, these ones didn't move that great, but it moved 100% from $1 to about 180, right? So this is a bad example, but you guys get the idea how it Let me see if I can find another one. Just not for strike prices purposes, but just for so you can see how it moved. Let's see this one. So this one, right? Okay. So this one went from 370 to $7, right? In a small short span during the lotto. So those are basically what we're trying to get and what we're trying to do. We're trying to find the plateau, and we're trying to get in at the plateau, more or less. And the way we're doing this is we're not just basing the trade based off of the option price, right? We're using that in confluence with this, right? And we're just waiting. We're waiting for a level to break. We're waiting for our confluencing factors, whatever it is, right? It's not. There's nothing changed as far as setup, right? We're still doing the same setup, same technical analysis, same way we read price action, same way we read volume. Nothing's changing in the lotto, right? Only thing that changes is the strike price, and we basically want to be quicker, right? We want to be quicker because we have a short time with that contract. But yeah, there's gonna be a day that I'm gonna record the active trader and the option block, so you guys can kind of see more or less real time of how it moves, how it moves, how it moves. But that's the end of day lotto. Is there any questions on the end of day lotto and how we pick those strike prices? No, that's it.
That was good.
That was good. Okay. All right. So now, since we broke down the lotto and we broke down the strike prices and the option block, like I said, I'm not going to go too much detail about this because if you guys don't know this, you shouldn't be trading options. Not going to go into active trader. We'll have one day where we sit down and we break down the whole active trader. So that's that with that. Q&A. So let's go ahead and let's hear those questions if anybody has them. If
Quick, do you recommend doing the same thing with because the profits can go up and down, like you said, the 50 cents can go to zero.
yeah,
I've tend to when it goes to like 50 cents to kind of not set up one, but have my manual ready to sell it, like if it starts to go down to 30, just to get
I
out.
wouldn't
No?
do that, right? What
Okay.
I would do is just use a technical analysis, wait for levels to break,
Yeah,
and you can start getting out. I wouldn't, just because the
the best way
contract's doing that, going, nah, just
to
fuck yourself up.
wipe you out.
Yeah,
Okay,
you're gonna fuck yourself up. I mean, it might work
thanks.
here and there, but like I said, we don't want to change anything just because it's a lotto. We're still relying on technical analysis. You guys,
Okay.
a lot of you guys have watched me for over a year straight every day, right? My strategy has never changed. I use supply and demand. I use price action. I use volume. I use the EMAs. I use MACD. I use VWAP. My strategy has never changed since you guys been watching me every day, right? Very,
Mhm.
very simple, and it's not gonna change just because of a lotto, right?
No, but yeah, right. On the other part, if it goes down to like below 50 cents, would you want to set a TP a little lower just to
So,
squeeze
so,
where you
so
can?
there's a couple things on the lottos, right? Like I tell you guys all the time, you're going into that as a lotto. So in the back of your head, there you have to be thinking that you're gonna lose that $100, right? We're not gonna lose the full $100, right? We're never gonna do that because we don't do that. I've never done that. I'm not gonna let you guys do that. You know what I mean? We don't let trades go to zero, but we have to get the confirmation that the trade is no longer valid before we get out. So now you're committed to this trade, right? You have to put your commitment into it. That's why it's very vital to wait for confirmations before you enter a trade, right? So there's no really easy way about it, right? Once you're in a trade, you're committed. You have to wait until, you know what I mean, until it hits your area to take profit, or the trade goes against you and is no longer valid. That's just how it
Great.
works. Yeah,
Sounds good.
and
Thanks so much.
yeah. That's what I wouldn't
Discipline.
yeah, it's
Okay.
it's hard, man. It comes, you know, you're gonna get it. It just takes screen time and experience. That's why, that's why it's very important not to get those strike prices that are under 50 cents. That's why it's very important to get like two strike prices out, because I'm gonna say it again, 90% of the time, if that 50 cent, if that $50 contract goes below $50, 90% of the time that I've seen, it goes to zero. 90% of the time, right? So with that in the back of your mind, once your contract hits that, you know what I mean?
But if the
it's like,
fundamentals are with you, you
yeah,
don't have to. You don't have to just get the short money. Let it play out till your fundamentals. Like, thanks.
exactly. Just do the fundamentals, man. And like I said, I'll sit here and try to help you guys and walk through every trade, but you just have to understand that it's the market, man. There's nothing we can do. Sometimes it's sometimes we're right, sometimes we're wrong. It comes all down to probabilities and statistics, right? 9 out of 10, 8 out of 10, 7 out of 10, right? Um, it's
Yeah,
all
we let them go and seen them go in our favor and say, oh shoot,
yeah, it's all
thanks.
statistics, right? And the more confluencing factors that you have in your favor, the more favorable your probabilities are. It's all numbers. It's all numbers game. It's
Perfect.
yeah. It's just uh, yeah. The probabilities are better in your favor. Now, yeah, yeah, 100%. Uh, questions? Anybody? Oh, Rob was the only.
But as far as like a team thing, maybe get like some people concentrate on certain things, even though we all have to learn all of it to understand how to use it. When other people, like you say, we have our own confirmations and our own, with their strategy, things that we have to genetically just use. But like some person watch like the other stocks, and some person watch like divergences, or
Okay,
what
so
they
what do you
see.
want? What
It's
do you
how we've
want
been
to
doing it
watch?
anyway.
Let me
But
ask you.
yeah,
What's your favorite? What's your favorite? What's your specialty, and what you like to watch? Let me ask you that.
yeah, sure. The RSI
Okay, you like to watch the
divergence.
RSI?
I want to learn what with the volume. Okay.
Okay.
Yeah, and divergences on it.
Okay,
Okay.
keep your then that'll be your job, Rob. You'll keep your eye on
Okay.
the RSI and
Yep.
divergences, and also remember, right, when you're doing that, right, something's very important that I'm gonna point out here, is that make sure you're calling out if it's on the micro, if it's on the five
Exactly.
minute, if it's on, because those are vital, right? Because yeah,
Yeah.
it's just vital. You just have to call those,
Time frame.
be very be on it. That's all I have to say. So that'll be your job. That's
Yeah,
already
and MACD divergences. That's something I used to do.
okay.
So
Watch the
okay,
MACDs.
thanks.
You'll be divergence specialist. I'll take a day and sit down with
Thanks.
you and break down some little tips and tricks and golden nuggets on the divergence, so you get
Awesome.
a little better on it. Um,
Appreciate it.
but yeah, we'll have you watch the divergence, and yeah, yeah.
And give details. Yep. Thanks.
Yes, sir.
And you got the other stocks that you seem to be able to scan all the stocks pretty well.
Oh yeah. It's just
If you
that's
do
yeah,
that.
I just been doing it for years. It's just a normal thing for me. You get what I mean? It's nothing has what I'm doing. I've been doing for a long time, and it's just what I mean. It's just a normal routine. It's just repetitive. Is that
And
all you?
I was gonna see, but what's the name of the website that you use for your um the decks level of
GX, gamma exposure.
gamma exposure? Yeah,
Gamma
yeah.
exposure. Okay. Yeah, I'm
What
not a
is
No,
specialist.
he is asking Dima.
just the
Okay.
website so I can I'm thinking of subscribing to that, or Blackbox has the um that exposure as well. But which one I'll look into both. I forgot the one that Dima uses.
I will tell you in a second, Dima.
Trader link.
Oh yeah, yeah.
That's it.
Thanks,
That's it.
Jeremy.
Yeah.
Okay.
Trader link.
That's it.
I believe it's
Even
trader
if he does it.
link. Yeah.
That's
But
like a little complicated how it plays out, but it's great.
Yeah, so you sent me something to Trade Society. How do you pronounce it? I'm not sure, but that seems a little bit easier because
Okay.
it draws levels on trading view chart. Right?
Visual.
You
Wow.
can, yeah, I think you can port those levels to like backpull levels and even Kamax levels to trading view
Good
chart.
research. Thanks,
So
CP.
no, so I basically started watching the videos that you sent me. Link. I
Yeah,
haven't finished.
the other one was TradeX, kind of a weird name.
nice.
TradeX, I think they call it.
Yeah,
Good.
this one is Trade Society. I think that's what you sent me.
Okay.
All right. So is there any other questions that anybody wanted? I know there was a question on confirmation, and I'll save that one for the last. If nobody has any more questions, I'll go ahead and
No. Is it sunny anywhere? It's been freezing here.
Heck no, it's cold and icy out here. I thought it was snowing, but it was
Oh, yeah, we get flurries.
Hmm.
We weren't supposed to.
Nice. Okay, so I'm gonna go over confluencing factors and confirmation. Before I go over that, is there anything else that anybody wants to touch on before I start that?
No, thanks. No, thank you.
Okay, here we go. So this is give you an example of confluencing factors.
For education only.
What'd you say, CP?
For education only.
Yeah, educational purposes only. This is not financial advice. Um, paper trading, I only paper trade. Okay, with that said, let's see. Okay, so pre-market low. I mean pre-market high, right? Let's see where this pre-market high is at on this one. At 477.97. 477. There we go. Alrighty. Okay, so all the trades are based off the 5 minute. We use the 1 minute for confirmation structure. We use the 5 minute EMAs. We don't use the 1 minute EMAs. We wait for a break of structure. We wait for continuance, and we wait for confirmation when we take any trade. This is an example of one of the trades that we took in the morning. You can watch the tape. I think I did a recap on this trade here, but this is one. Let's get these out the way real quick. So this is one trade example, and that we took, and I'm gonna give a confirmation on it and all that good stuff. So this is the 5 minute here. Okay. As we see, as we open, right, we have this nice structure that's being built. Continuous buying algo, right? An hour from the open, right? Actually, when the data dropped, they continued to pump, right? So there's two things when I'm coming on, right? I'm looking at, right? I'm gonna be looking for a continuance or a break of structure, right? And there's gonna be multiple ways that I'm gonna gauge that, right? One way is pre-market high, pre-market low, which we have right here, 4778, 47798, and then the next BJ key level is 47853, right? So right off the open, I can see, the volume is building. What chart is this? Wrong chart, sorry. So right off the open, I can see that we have this nice little trend line that we created. So if I didn't catch the long off the open, which I try not to do, I just try to wait. Then I'm looking for uh, either a break a structure or a continuance. So right here, I was waiting for a retest, right? For the retest of the pre-market high before the retest of the pre-market high, right? So I was looking for it broke the pre-market high here with nice volume, and it started to exhaust, which always happens when you break a level, right? I was waiting for a retest, and I was gonna get into the upside, right? But that didn't happen. What eventually happened is we broke this trend line, and we went back to break the pre-market low. So now I'm going back to the 1 minute because I'm seeing that we're starting to break a structure, and I'm waiting for confirmation. I would start my pilot position somewhere in one of these candles right here, right? Pilot position means for me is 5 contracts, right? For some people it should be 1 contract. A pilot position is pretty much, for me, on the pilot position, I don't put a stop loss. I put a mental stop loss, right? I don't put a physical stop loss until I enter into meat and potatoes and until I take my initial profits. So when I'm here in here, I don't have no physical stop loss. I do have a mental stop loss, right? Every time I go into any trade, I have a mental stop loss, and my mental stop loss is that pre-market high, right? So in my head, if I get a clean break above the pre-market high, I'm gonna exit my pilot positions because there's probably a chance that it's gonna go up. Like I said, use the cloud and continue to push up. But since it broke structure, I'm in a pilot position, and reason I'm not in a full size position is because we got the VWAP right there, right? So with these 5 contracts, pilot position, I'm still holding. In the break of the VWAP, I would enter my full size position, right? So on the break of the VWAP, I'm in a full size position. I'm either gonna take my meat and potatoes at the first key level, depending how quickly we get there and how much volume there is and what the price action is. It's either I'm gonna take my first, I'm gonna take my full size position out, or I'm gonna continue to hold it to the next one. When we came here, the volume was beautiful, right? Nice, beautiful volume. The second candle, the volume started building up. So I knew that, I didn't know, but I felt that it was gonna break the level. Holding meat and potatoes, sold meat and potatoes on this candle right here. Now I'm back to holding my pilot position, only 5 contracts, right? So now I put a physical stop loss. Now I have a physical stop loss. So you remember we entered on top of the VWAP with the pilot position, right? So I'm gonna put my last 5 contracts $10 above my entry. So that means I'm gonna exit these last 5 contracts $50 above what I entered. So I've already made a nice, beautiful profit, maybe 100% on my meat and potatoes, which is anywhere between 25 to 50 contracts, depending on what I'm playing, Spire, SPX. So initial move, follow through, take profit. Now the remaining, I'm having a stop loss. Look, these are pulling back against me, right? This is why I exit meat and potatoes. You guys see it every time I tell you guys exit, take out your meat and potatoes, only holding runners. I say that over and over and over when we do it. And I don't want to say every time, but almost every time it pulls back. I'm not saying it pulls back and doesn't go down, but it pulls back, right? So using the chart as navigation to guide me, I'm using the VWAP, I'm using the cloud as a stop loss for the last 5 that I'm holding. Remember, I entered right here on the break of structure, so even on this candle, I'm still winning. I'm still gonna take profit, right? But I know that the VWAP's here and the VWAP got to my back, you know, and without going into too much detail, I'm sure the 9 and the 20 crossed as well. You know, but this is one example of confluencing factors off of the price action. I would continue to hold this trade until, you know, either LOD or whatever pre-market low, or until it breaks, until it has a breaker structure, right? So for example, this trade would probably be done down there, right, where it breaks the structure right here. I would wait for this structure to break. Once I get a clean break right here, then I'd probably take my profits, you know. All depends, it's all different each time. But if we go to if you go over here, right, and we'll look at that, look at when that happened, right? Let's go look what's going on as far as my indicator. So this is my indicator chart. So you, as you see right here, it breaks. I entered here at 478 using no, I entered right here using the pre-market high as a stop loss. It broke the VWAP. That's the confirmation. You probably take your profits around the 50-day, and then you continue to hold when the 9 and 20 crosses. You continue to hold your runners. Took the meat and potatoes out here. Right here, look, the 9 and 20 cross here. So that would be another entry. I always tell you guys all the time, when the 9 and 20 crosses, it's enough to break the 50. Right here, when we pushed down, we couldn't break the 50, right? We went below, but we never broke it because we didn't have the confluencing factors of the 9 and the 20. As soon as we get the confluencing factors of the 9 and the 20 crossing, then we easily break that 50, right? So another confluencing factors, watching the EMAs, understanding. It's very, very vital to understand the EMAs, right? And understand how they're supposed to be aligned, the direction, because a lot of people just look at the EMAs and not understand. They say, oh, EMAs are pointing down, or EMAs are this, but they're not aligned. I'm going to do a brief breakdown of what I mean by aligned. So if you want to take it to the short side, you need the green first, yellow second, and red third. You need the 9 being the leader, you need the 20 second place, and you need the 50 in third place. And there has to be a nice distance between them, right? And then for the long side, for it to be long, you need the green, 9, 20, and 50, same thing. So something to keep in mind. And then once you start having them cross is when you start having, you know, breaker structures, nice little pushes, stuff like that. So pay attention. You know, this is bullish, and all of a sudden the EMAs are crossing down bearish, right? So things to pay attention. Yeah. That's more or less an example of a confirmation. Is there any other questions?
That was excellent review again, bro. Thank you.
Thanks, Chairman.
No problem. Is there anything else anybody wanted to touch on? No? Okay. Well, that looks like it's gonna be it for me. There's like one more thing I wanna. That's it for me. Tomorrow, I'm gonna have a new exercise for us to do before pre-market, right? It's like a visualization exercise. It's just gonna help us start the day a little bit more. I'm gonna walk you guys through almost like a meditation where we're visualizing taking a loss, visualizing stop losses, visualizing TPs. I'm gonna walk you through a nice little 10-minute meditation before we start the market. So please, guys, tomorrow try to be there. 30 minutes before the open. Maybe I'll open it a little bit earlier, but there's gonna be some new exercise that I'm gonna incorporate to increase our mental capital. And this is all for the benefit of the team, guys. All for the benefit of the team. There's
Sounds good.
some research that I've been and if I feel that it's beneficial for our team, I'm gonna try to incorporate it to our team.
Excellent.
Is there anything else that anybody wants to touch on?
All set from my side.
All
Thank
set.
you.
That's all
Thank you.
good.
Looking forward to it.
Let me check the chat real quick. The chat's empty. Chat looks good. All right. Real quick. Thank you guys. I appreciate you guys. I will see you guys 30 minutes prior to open tomorrow. Go ahead and take this time to kind of relax, guys. Relax. Use this time to re-energize. Use this time to reset. Later on in the day, check mentorship, check journal section. Gonna have you guys do a triple R, reflect, review, reset. I'll have the description and criteria that I need you guys to do for this assignment. We didn't have the market today, so you guys gonna have an assignment, right? So give me check about 45 minutes, and then I'll have the assignment ready for you guys. Like I said, it's gonna be a 3R, reset, review, and recalibrate. So that being said, thank you guys, and I will catch you guys on.
Thank you for your time, Jeremy. Appreciate it.
No, thank you guys.